Welcome to Money Talk with Aaron Ricketts, presented by Ricketts & Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Aaron's back with us in the studio. Good afternoon, Aaron.
Hi, John.
Oh, I shouldn't have said you're in the studio. You kind of sort of are, but not really.
Yeah,
right.
the distance, the safety.
Yeah, we're on
from
the
studio.
we're on the phone here, so we keep rolling along here. I guess hopefully each week we hope to get a little bit closer to the end, don't we?
I would think so, right? That has to do with a lot of things, right?
Absolutely,
and
absolutely.
the spring and the summer and
so yeah.
Okay.
So where are we at from your standpoint?
Well, I think a year from now we're going to look back and say this was probably the week or the weekend or the maybe next week is when we saw the changes, right? Maybe the peak of the coronavirus as a whole, as a nation, right? Because some areas are still peaking, have a lot more cases than others, but I think, and according to the scientists and our political leaders, that I think a year from now we're going to look back and say this was the week or next week where we hit our peak and then we started the recovery process. I think.
Okay, that would be good. That would be good.
Yeah. And I had wrote something on March 30th to my clients, and I just wanted to share it with everybody because it's this whole thing is a continuous process. It's like every day, especially the last few weeks, every day it was something different, something new, or more information, or a change from some information we thought was correct or true. So I think we're going to continue to see that. Of course, things have settled a bit. We still have, crazy ups and downs in the market, but I don't see that changing anytime soon. But I'll read this right here, and it says, over the next month, economic data from around the world will begin to reflect on the COVID-19 pandemic and the scope of the global economic shutdown that the virus has caused. The data will have something for everyone. From the biggest bulls to the loudest bears, markets have moved drastically to price in much of the damage. And I'll talk about that, too, in a minute. Eventually, this too shall pass. Scientists will produce a vaccine, and the frozen global economy will thaw out. But before we're on a path to economic recovery, we need to see a peak in the number of new coronavirus cases, a clear decline trend, and specific developments that signal we can heal. The stock market may anticipate these conditions earlier. My goal here is not to predict when that will happen or call the bottom. I will leave that to others. No doubt someone will guess right, most will guess wrong, but if we stay invested, we get it right.
Well, is this going to be an interesting month? I mean, normally you would be getting first quarter earnings reports. Are those going to be delayed, you think, or how might that work?
I don't think so, because what I have read is that most of the accounting, gets done pretty quick. It's all the data is there. So for the most part, so I don't see any big delays in that. What's interesting to me is you have January and February. Remember, we hit a peak in the market in February, mid-February, let's say, and so we should have had positive earnings through those 6 weeks or maybe even 8 weeks. And then, the market decline started, somewhere in early February. So that was the time when, cases were starting to become more prevalent, and then certain areas of the economy or the states started shutting down. So that's when the market declined. So really, we have almost 2 full months of good positive economic data. So it's just the last month. So all the companies that are reporting the first quarter might not show a huge decline, but the market predicts the future, or attempts to predict what's going to happen in the future. So obviously, when the entire country or global economy has seized up, we're going to see a significant, number decline in earnings. So I think when they come out, it's not going to be any surprise. There's already some earnings that have been, let's say, predicted pretty accurately. So I think we're going to not see a delay, and we're going to just keep on moving just like we have been. And since you asked that question, I will tell you that, talking about the market in general, most stocks hit their low in mid-March. And then on March 23rd, year-to-date, the market, I say the market, I always talk about the Standard & Poor's 500, the 500 large companies in the United States. On March 23rd, the S&P 500 was down 30% year-to-date. As of this last week, it's down about 13 to 14%. So that's quite a big swing, right? You drop 30. Matter of fact, from the high, it dropped about 35%, and then swing back to get back most of that to 13. Have a lot of conversations with clients and others. Are we? Was that a bottom? Is where we're at a false bottom? Do we have room to move around? We sure do. I don't think that there's anybody trying to say that they know exactly what's going to happen. But when I look at these the numbers, and I have kept track pretty much every day, and have my little cheat sheet where it helps me have a good conversation with people to talk about, this is how it was, this is how it is today. We never know where it's going to be, within a week or two or a month or maybe even 6 months. But we certainly know over the long term that markets do recover. And that just it talks about who we are as a society and how we like to do things, which is get out and do our thing, right? Have fun, enjoy ourselves, and work hard.
Right. I mean, because I figure, the market reacts depending on what they think the earnings are going to be, either positive or negative, up or below that number. But how can they even come up with an idea, the markets, of what they think the earnings should be based on what we've been going through?
Yeah, that is a great question. I've seen some figure somewhere about 30% of the economy is in a positive earnings mode. You think about those companies that are, supplying us with digital media, the companies that are involved in all that, involved in grocery stores and products and Amazon, getting deliveries to us, and UPS, maintaining their workforce, hiring more, and continuing to provide us with the things that we want in our homes that they've always provided us. I saw some numbers that's about 30% of our economy. So a lot of those stocks, many of them, are at their all-time highs right now because their income or their revenue is so great. Now, I'm sure that's going to change over time because people are going to stop spending money, but start spending money on those other things that we did, eating out, the entertainment, taking cruises, flying somewhere, all those things that have, closed down or seized up. I'm always concerned, okay, the rest of that, manufacturing group, how fast can we get those businesses back up, right? The big companies. I know small companies are very important. They're a big part of it, of our society, but the big companies that pay a substantial wage to a lot of people, especially in our manufacturing state of Michigan. Hopefully we can get things going, within 6 months to a year, so we're, hitting on all cylinders, and instead of, hitting on four cylinders when you drive an 8-cylinder car. You don't want that.
Right.
So,
well,
I wish I could answer your question specifically, but we're, the market is always trying to, predict what's going to happen. I always talk about, what moves the market, and, reading enough and being in this industry for 20 years, who moves the market are I call them the big boys and girls, the insurance companies, the pension companies, the mutual fund managers, the ones that really push money into the market or pull money out. And there are technical analysis that are done just based on that, meaning some people will buy and sell just based on what those big managers are doing for their accounts. And it's all public information, so as long as you pay for that service, you can get all that data. So where are they and what are they doing? The conversation I see on a regular basis is that most of the sellers have sold off. So that would be them. This rise that we've had just in the last couple weeks, or let's say a month, a full month now, this pull or comeback that we've had have mainly not been from them. They're from other investors who are deciding, like one thing I talk to my clients about. You remember 2008 and 9? We had this conversation back then about staying invested. And just remember, a year, 5 years, 10 years from now, we're going to look back and say, boy, I wish I was all in on stocks, right, in 2008 and 9. Doesn't matter what day you bought in, just as long as you bought in. You can't predict that one particular day. Well, I believe we're still in that mode. We're still, I should say still, we're back in that mode where there's some opportunity here that a lot of people could have. And then, 5, 10 years from now, to look back and say, boy, did I do the right thing? I do hear some people tell me, well, this one's different. Well, they said the same thing. I said, I've been in the business 20 years. They said the same thing, after 9/11. We had a significant, seize up in the economy. It was just a U.S. economy. It was a global economy. And remember, we're the big player in this global economy, so it affects us, a little different from everybody else. The good thing that we have is we're a very wealthy country, so we're able to do the things that we did and get us back on our feet faster than other countries. And I don't see that being any different. But back then, we had a lot of people saying, well, this time it's different, right? We've never had, such an attack, and we're already, kind of in a recessionary period, and it put us in a huge recession for a long period of time. But we came out of it, and then, of course, we had what happened in 2008 and 9. We came out of it, and I'm predicting that this 2020 time, we'll look back 5, 10 years from now and say that was no different. And maybe because we've had 3 of these major pullbacks in most of our lifetimes, we'll accept that more, accept the volatility, because those that can accept the volatility are always the ones that are rewarded in the future because they stayed invested, they accept the risk involved, they continue to be diversified, and I always say the stock market, for the amount of risk that you take, is the least amount of risk that you can take in most investments that are out there and get the kind of return that you can get, compared to fixed investments, compared to, hard asset investments such as real estate and other things. People that are in those businesses, some of them are very good at that, but most of us, the stock market and the bond market and buying mutual funds are the best way to go for all of us.
Well, we're starting to run short on time. What about the stimulus checks for people? And maybe they should consider, if they can do it, putting that into the market.
Yeah, that's an option. Sometimes it's hard. I tell people they have, a little bit of money, $500 to $1,000, and I say a little bit of money. I mean, to invest in the market. It's hard sometimes because it's expensive. But certainly if you have extra money, I would say that people should be, talking to their advisor. I'm not an individual stock guy. I don't sell individual securities as a way to make a living. I do investment management, usually with mutual funds, but there's a lot of brokerage firms out there you can do right online and open your own account, and you can pretty much do a lot of research on your own on the internet, and just find out what companies or what sectors have been beaten down, and I'll bet you can probably think of 3 or 4 on your own before you even do a search about that.
Well, if there's people out there, and everybody, as we said before, situation is different, and they want to get or have a chat.
Sure.
How can they do that?
Give me a call, 265-3540, and I have had more this last few weeks people call me than ever, so that's good. And I've had great questions, and if I can't answer your question, I'll try to get you an answer or, tell you, talk to your accountant, talk to your banker, but call me, 265-3540.
Aaron, once again, thanks a lot. Stay safe, and we'll talk to you again next week.
Okay, thanks, John.
That's Money Talk with Aaron Ricketts, presented by Ricketts, Ricketts & Associates, 3245 North Adrian Highway, Suite L. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Join us once again next week for Money Talk here on 103.9 WLEN.